How's it going, everyone? This is Josh Selway again with the Schaefer Stock Market Podcast, here to give you a quick rundown on some recent developments in the stock market and other financial news. A lot of different stocks I want to hit on today, but first let's talk about some general broader market action. And I want to start with, of course, the fact that it looks like a trade deal with China should be getting done soon. That's what all news reports seem to be indicating, that both sides are willing to get something done fairly quick, it would seem. Going off that, a lot of people have been expecting a deal to get done. There's too much on the line between these two sides. You know, President Trump wants to see the stock market go up. He wants to see investors happy, and China has a lot riding on this as well. There's a lot to be concerned with in their economy if you keep up to date on what's happening in China and their markets as well. So both sides, there's simply too much at stake. They want to get something done as quickly as possible. But, of course, the focus is already beginning to shift from China to other places. For starters, President Trump has been discussing potentially closing parts of the southern border with Mexico if they don't curtail the drugs coming through the border. What I would suspect may happen here is that after things conclude with China, if they do, there's going to be more question marks that arise. What's going to be done with Mexico? Trump right now has given them a year to stem the flow of drugs across the border. And one option, as I said, he's considering closing parts of the border. But then besides Mexico, you also have European trade partners who the U.S. may shift their focus onto next to get individual trade deals done there with some of our biggest trading partners. And President Trump has already shown a willingness to, shake things up with some of our closest allies, specifically Germany. If you remember when he met with Angela Merkel, he didn't shake her hand. Everyone thought that was a big deal. It's just trying to suggest that after this China deal, we could see similar storylines play out going forward, where we get something done with China, markets react positively, and then before you know it, we're on to the next storyline that could be almost the same as we've seen with China. Maybe not as much on the line. We're talking about the two biggest economies in the world between US and China, but still, these are all, sometimes it doesn't make a lot of sense what's weighing on the markets. So even if the trade deal doesn't have as much impact on the world economy as the China-US trade deal, it could still hold back stocks, as we've seen the US-China trade drama do in recent months. So that is where we are from a broader standpoint. And also today we had a strong jobs number. I haven't had a chance to really dig into it yet, but the headline number came in above consensus. And if you recall, this comes after February's number was dismal, way below expectations. It was like 25,000 jobs or something like that, and came at a time when many people were fearing about the health of the global economy. This job number, at least momentarily, is putting that to rest. But of course, after this, we had President Trump come out and say that he again is calling for the Fed to quit the tightening cycle that seemingly just begun after years of quantitative easing, and he would like them to go back to that. So this is more President Trump putting pressure on the Fed, which you could speculate already had some effects after Powell and Jerome Powell and the rest of the Federal Reserve seemed to quickly change their stance from late 2018 into this year. So those are some things that are happening from a broader market perspective. The Dow is on pace for a weekly win, but let's get into some individual stocks and storylines. If you've been a regular listener to the Schaefer Stock Market Podcast, a couple weeks ago we did a podcast on video games, and we talked about 5G and how the future of gaming kind of needs 5G, the new wireless technology that's going to be a game changer and bring in much faster speeds, internet speeds, and that's kind of what the future of gaming needs. We're looking at streaming video games over the internet and the cloud, and we need much faster capabilities in that regard. And just this week, Verizon, this came sooner than people were anticipating. Verizon launched its 5G service in Chicago and Minneapolis. This is in certain areas. They're trying it out there to see how it goes. From what I understand, in order to access this 5G technology, users will need to add a Verizon 5G Moto mod to their cell phone. It seems like something you clip on the back of your cell phone. Since most cell phones right now are not capable of utilizing 5G technology. That is certainly something to keep an eye out going forward. The download speeds for that are pretty astonishing if you look at what they're projecting this 5G to be able to do. So it's already rolling out in Chicago, Minneapolis, and that put some attention on Verizon stock. There was some increased call activity on Verizon following that news. Mostly people trading weekly calls, hopefully expecting more upside for the stock before this week ends. Next, I want to talk about Facebook because there was a really interesting analyst note out of Deutsche Bank, which said that its new Checkout with Instagram product, which it launched in March and will allow users to shop on Instagram, that could add $10 billion in sales for Facebook in fiscal year 2021. So Checkout with Instagram. Now, when you get on Instagram, you see something you like, Kendall Jenner's wearing something, The Rock's wearing something, or is using a product, whatever it is on there, you can swipe up and it'll bring you to a place where you can buy that product. And naturally, this would make sense. It seems to be something that many people will use and find interesting. I found Instagram to be the most useful social media platform as far as discovering new things. I think their hashtag features work really well, and I could see this working out extremely well for Facebook and Instagram. And Deutsche Bank also thinks that this Checkout with Instagram, if it launches properly, could help Facebook's flagship platform as well as the growing Facebook Marketplace. Facebook Marketplace is also something I find interesting because it's so simple to use, and it just makes so much sense that people have a lot of stuff that they don't use anymore, and instead of trying to put it on eBay or try to ship it somewhere or do these other things, you can just put it up on Facebook, people around you see it, and you sell it to them. And it's pretty simple, and I've used it a few times. If this Checkout with Instagram grows properly, you could see that also help grow Facebook Marketplace as well. On the whole, Deutsche Bank expects Facebook stock to get all the way back up to $200. That's their price target. They reaffirmed their buy rating. At the time of our writing, when we wrote about Facebook earlier this week, the stock was trading around $174 per share. It's up around 33% so far in 2019, so Facebook's really come back. And another thing I want to talk about with Facebook, I mentioned a while back on the podcast, maybe close to a year ago, 6 months ago or so, I'm not sure, but it's been a while. The thing I was thinking about then was that Facebook was going to continue to see these stories emerge, and we have seen these stories emerge about security issues, misuse of data. You know, if they messed up in one place, you would assume that they probably messed up in a lot of different ways, and they have. These stories continue to come out. They had a bunch of people's information just sitting there on the Amazon cloud where people could get into. But what's kind of happened and what's been interesting is that people sort of don't care anymore. They've been fatigued by these Facebook stories to the point where it doesn't really affect the stock price too much. When that Amazon story came out, it kind of popped up, breaking news, Facebook messed up again, but nothing's really happened. It's kind of interesting twist on a theme that I was looking at a while ago, is that these stories are going to continue to emerge and hurt Facebook. But now it seems like there's been so many, people are just like, yeah, they messed up, but they're still making a lot of money. So just wanted to point that out. And let's talk about Amazon next, because there were a couple different analyst notes that were interesting on Amazon this week. One of those notes was out of Credit Suisse, which mainly focused on FedEx. It was saying that FedEx can continue to increase profits and market share in delivery as it continues to compete with Amazon. It thinks FedEx will be just fine, has a good place in the delivery space. What's really interesting about this note is that they called out what they see as pretty tremendous growth in the next 5 years in the U.S. parcels market. It actually believes that market can double in the next 5 years. So while FedEx is strongly positioned from their view to compete with Amazon in delivery, there is obviously plenty of room for Amazon in this space as well. So again, Credit Suisse predicting that the U.S. parcels market will double in the next 5 years. And the other note on Amazon was out of Oppenheimer, which was noting more strength out of Amazon Web Services, AWS. A lot of analysts love this business or Amazon. It's seeing huge growth every single quarter. It's always the main highlight of their earnings releases. And what Oppenheimer was pointing out was that Amazon Web Services is in a unique position to utilize the growth in artificial intelligence. There's plenty of room to move to the cloud globally for businesses as well. There was an analyst last week that was discussing how much runway there is left in the global market as more businesses move to cloud. There's only like 20% or so, if I remember correctly, around there of global business work done in the cloud right now. And you can only imagine that that's going to take off tremendously in the next 5 to 10 years. So Amazon Web Services, the runway for that business in particular could be pretty high, especially if it can use artificial intelligence in a proper way, as Oppenheimer is predicting. Just a couple other things here to mention for Amazon. One, they just again cut prices at Whole Foods, which was a negative for Sprouts Farmers Market. That is ticker SFM. And also there's this story circulating about Amazon wanting to launch thousands of satellites into space that would enable it to offer broadband internet. So you know that Jeff Bezos, the Amazon CEO and founder, already has his eye on space with his Blue Origin endeavor. So this could be a way to sort of have those two businesses meet in the middle, sort of like Elon Musk did with Tesla and Solar City. That is something to keep an eye on too. I know that Facebook wanted to do similar things in the past. I don't think Facebook had any plans about going to space, but they did flirt with the idea, or maybe they tested it out. I'm not sure exactly what they did for it, but they were flirting with the idea of having blimps or balloons or something like that floating around in certain countries to help deliver internet access. So these tech companies continue to flirt with these outside the box ideas. And speaking of blimps, I don't know if anyone saw on social media this tweet that went viral, and it was this Amazon blimp flying through the air, and then out of the bottom of this were all these drones that were popping out, and it was something like out of a sci-fi movie. And I know in the past there was talk about Amazon having a flying warehouse, so to speak, and where it could deliver packages to certain areas and using drones that would fly out of the bottom of that. So if you want to try to find that on social media, it really is quite something to see, this huge Amazon blimp with all these drones just dropping out all over the place, which, who knows, maybe that's the future. I guess I have to at least mention Lyft, the big IPO in recent weeks. Lyft popped out of the gate on its first day, but then the following days fell below its IPO price. Everyone made a big deal about that. It seemed like just a silly overreaction. You have these types of things on Wall Street where people find these weird talking points and continue to discuss them even though they really have no meaning. But in the subsequent days, Lyft has been rising back somewhat. It's trading around $75 per share at last check. You had Citron Research, that is the infamous short seller company led by Andrew Left. They advised against shorting Lyft, which is probably good advice because I believe that the borrowing cost was around like 100% to borrow the shares of Lyft. I don't know much about short selling, but I was reading about that, so that seems pretty insane. I don't know who's going to be doing that, but Lyft is trying to get back to those levels it saw on its first day of trading. It traded as high as $88. Options trading has started on Lyft, and when we checked in on Thursday, traders were targeting the $100 level. Those were call traders, so some traders may be expecting Lyft stock to get to the $100 mark in the weeks ahead. I believe that was in the June series, so giving Lyft a couple months to get up to $100. I also wanted to call attention to our indicator of the week, which comes out every Wednesday morning on Schaefer'sResearch.com. That is from our senior quantitative analyst, Rocky White. And this week he was looking at data around buy, sell, and hold recommendations from analysts on large cap stocks versus small cap stocks. And he basically charted this out to show the spread between buy ratings for the two different groups. And he was looking back around the time of the financial crisis. And right before the financial crisis, this is pretty interesting, the spread between buy ratings for large cap stocks and small cap stocks was essentially zero, meaning that analysts were just as likely to recommend buying a small cap stock, which makes sense because when times are going well, analysts may be more likely to recommend seemingly riskier assets such as small cap stocks. Right now, what we're seeing, even though stocks have been rising in recent years, that spread is actually fairly wide, suggesting that analysts aren't overly bullish on stocks. And from our perspective as contrarians, that could be a bullish signal. So if you want to go check out that data, it's over on schaefersresearch.com. The title, Emerging Analyst Trend Could Be Positive for Stocks. And if you check that one out, I would also recommend, as I said, every Wednesday morning we have an indicator of the week coming out from Rocky, and it's always interesting data, always a quick read to get through. But I've already gone over my scheduled 15 minutes. I can't believe I had the audacity to do that. So I'm going to leave it right there. If you haven't already, check out Schaefer's on Twitter, StockTwits, Facebook, and Instagram. We're trying to do more on social media, get more of our content and data out there for people to check out. Again, check out our free newsletters over on schaefersresearch.com to keep up to date on the market and continue to listen. I really appreciate all the listeners that have been checking in every week. This has been growing at a faster rate than I expected. So thank you again to everyone who's been listening. Subscribe, rate it, whatever you want to do. But I'm going to leave it there. Until next week. Thank you again for listening. This was Josh Selway. Talk to you soon.